Hi, fellow traders. Well, we made it through another week. I hope you guys had a great week, and we are ready to sit back and enjoy this long weekend. And I don't know about you, but I am taking it off, completely off from trading. Um, we're gonna do our Sunday morning session, but that's it. Come in and do the market analysis, do the swing trade deal, and other than that, that's gonna be it. I think there are times where you just need to shut it down, sit back, get refreshed, and come back next week strong. So that's exactly what I'm doing. And I would suggest you guys do the same. I know a lot of people were saying I'm gonna study all weekend and I'm gonna do that, but there comes a time where you really need to just chill out and recharge your batteries. And I think this is a perfect weekend to do that. So how many of you guys feel like trading the market is like throwing your money down a black hole? And when light goes into a black hole, it disappears. Nothing that goes in comes out. And I know that's how a lot of you guys are feeling. That's how I felt in the beginning. It's like I was always depositing a little bit here, a little bit there, to keep going. And a lot of people ask me, when am I going to know whether I'm a trader or not? How do I determine when I made it? And the simple answer is when you become a withdrawer and not a depositor. Because real traders, true traders, do not deposit. They only withdraw. And so when you are just withdrawing and you're not depositing, you made it. And until that point, you're just a pretender. And you're going to have to do whatever it takes, put in the hard work, be dedicated, and do the things that you need to do in order to be successful. And the majority of us just won't do what we know we need to do to be successful. We know it's not that we don't know. It's not that we're uneducated. We know the things that we need to do, but we just don't do it. There could be many reasons. It could be that we just don't want to do it because we're lazy, or we don't want to do it because we feel like we're above doing this and doing that we should be more advanced. And some of us just can't figure out why we can't follow our rules. The fact is, we know what to do. We know it. And if we just did it, we would be fine. But something inside of us just prevents us from doing the right thing. If you think about it, trading is nothing but a set of rules. The rules that define our strategy, our risk parameters, things like that. But again, we just won't, or we can't follow those rules. We know we've learned how to do it. We know the strategy. But for some reason, we can't stick to it. It's like when we have a big winner. We have a really big day. And we look for that. After that, we like, hey, we got it. I got this now. Every day should be this way. And that is not likely. But we go in and we try to make every day like that. Things that worked really, really well the day before may not work the next day. And it's not the market. It's if it doesn't set up, if the trade doesn't set up, then we don't take the trade. It's not the market's fault if we take a trade that didn't set up and we lose. It's our fault because we made the bad decision. And we broke our rules. And, we pay the consequences. So just think about it. How many people every day just break the rules that we have for ourselves? And sometimes it gets us in trouble. So that's what we need to work on. We need to work on being able to follow a set of rules to do it every day, regardless if we're going through a win streak or a losing streak. We stay consistent with what we do. Because, again, it's not the market, it's not the strategy, it's the person trading it. You know, that's usually the X factor. And we're the people that are not following the rules and not doing the things that we promised ourselves that we were going to do. So if you guys are in that trap, you know, you want to know how to get out of it. If you're just a break-even trader and you can't seem to cross that threshold, and it seems like the money you put in is not really coming back, but you're able to maintain. You just can't get anywhere. It's like you're caught in the gravity of that black hole. You can't get away from it. Because you know that black hole has a big ring of gravity around it. Once you get caught, it just gradually sucks you in. So you may be feeling like that. That's why the roadmap to success, the program that I have, is perfect. Because I take you from A to Z. I don't skip A, B, C. Because it's not marketable. Just because it's not exciting. If you never get A, B, and C, and you try to start with D, you're not going to get anywhere. You're going to always try to figure out, what am I missing? I can't get consistent. I can't, do the things I want to do in trades because you didn't get A, B, and C. So we're covering A, B, and C, and then we're going to D, E, and F. And you're going to have a complete guide to help you deal with this and to work through this so that you don't feel like the market is just a black hole and that everything you put in just disappears and that you will never get a return on it. So we're starting this live in June. I'm going through it again step by step. Like I said, I try to do this every year. I opened up 25 more seats, and I've only got a few of those left. Now, I was shocked. I didn't realize they would go that fast, but they did. But I have to keep it low. I have to keep the numbers low so that I can answer every email, and I could do the mentor sessions to where you're not having to wait 2 or 3 weeks just to meet. So I have to keep the numbers manageable. But you can't beat the deal. $250. You got 6 months of intense education. And yeah, you may not like it sometimes, but the things that are good for us, most of the time we don't really like. But it's what you got to have in order to get to where you want to go. So if you have any questions, just reach out. But all you have to do is go on the website at AverageJoeTrader.com under memberships. You can't miss it. So $249 for 6 months. You get an hour of mentoring each month. And, hey, don't say I didn't warn you. Don't say I didn't tell you so. All right, so now the market this week, and I said this on Sunday. I was like, this is going to be a really interesting week. And I was thinking that the market was going to be an interesting week to where it was fun or it was good. But it was a very interesting week, and it was bad because it gapped up on Monday, and all of the swings triggered. And once it triggered, they've been selling off every day this week. The market hasn't sold off. Yeah, it's kind of traded in the range here, but the market has not sold off. It gapped up. It stayed over that 285 level for the most part. We did lose it on Tuesday, but we got back up on Wednesday. and we closed above 295 today. All of these key levels they're holding. You see, this red line. This is the 5-day moving average. This is the shortest and the most aggressive indicator that we have on the daily chart. And if we are holding the 9, this is showing that there's some strength in the market. But for some reason, the stocks just aren't following suit. And, that made this week interesting. Now, we couldn't break the 90-day. That's the orange line that's coming in. We've had trouble with that. And if we break the 90, there's the 200 sitting right there. So, we still have a ways to go if we're going to break through this. But what's really interesting to me is that this isn't breaking down. But, a lot of the technical setups on the swing trades are breaking down. So, and I talked to my mentor this week, and I was like, man, what's going on? Why is this happening? And he's like, I don't know. And I'm like, man, you're my mentor. You're supposed to have answers. He's like, I've told you 10 times. I don't think it's resonated yet. But this market, nobody has ever traded before. You have people that think they have and think that 2008, 2009 was kind of the same thing, but it's not. There's so many different elements here. He's like, the main difference was in 2008, the banks didn't have any money. They were broke. Now, the banks are loaded. And they're able to, lend a helping hand through this. But eventually, things are going to have to start getting paid back. If they don't, the banks are going to be in the same mess they were in with the mortgage crisis, sitting on worthless paper. And then that's going to create a whole nother issue. But, it's really interesting. And here it is. I know what the issue is. I know that this isn't a market that we've ever experienced before. But yet, I don't want to believe it. It's something I know, but I'm caught in that trap where, somebody's got to have an idea of what's going to happen next. But in reality, we don't. We just don't. So come Tuesday, I wouldn't be surprised if we've gapped over the 200 come Tuesday morning. I would not be surprised. And I still wouldn't be surprised if we've got down below the 20 on Tuesday morning. So I wouldn't be surprised at anything. So what we need to do is just trade the market one day at a time. Look at what it's given us and then make our moves accordingly. All right, but we'll talk more about this on Sunday morning in our market analysis session. And I'll give you a little bit more of what I think is going on here and what I'm expecting the market to potentially do. And that's about all we can do at this point. All right, so Thursday. This was our trade on Thursday. I only traded BA Thursday, and I made an error here, an execution error. I rarely put my stop out, and I have a rule now not to put my hard stop in until we at least get over the high of the entry candle. Because what happens oftentimes, you get a volatility flush if you're going long. It just takes out stop orders, picks up some volatility, and then starts to move back in the direction. And I didn't mean to put a hard stop out. What happened was I expected this to go immediately. It didn't. A little level of frustration came in, and I just threw my stop out without even thinking. And sure enough, I got caught in that volatility. And then, I got upset. and had to jump back in. I realized that I'm still setting up. So I'm gonna jump. I jumped back in and got the trade again, and then it started to work. So I got in. It ran right up to my first target here. Was able to take some off. Went to the second target. 144.50 was my next target. It just didn't make it there. But that was the goal. What was to hit 144.50. So it came all the way back in, and I took it off at break even. I should have done a profit stop up here once we broke the low, but I just stuck to my break even stop, and it erased some of the losses here. But it always sucks to start the day off red and you made a little mistake, and then you have to make up for that, and then keep trading well. But Thursday it was okay. Didn't really get back in anything else. I saw a lot of channels, and trading in channels is where you lose all your money. We're going to focus on that in this roadmap to success. When we get into the operational part of it, we're going to focus on knowing when a stock is trading in a channel, how to identify it, and then how to trade it once it breaks out. What we need to look for. So a lot of times our setups happen, but if they're within a channel and there's no room inside of it, you're not going to make any money. You're going to end up losing. So that's going to be very critical. So that was Thursday. Now this morning, we jumped on WYNN. This one had a really big sell candle, and typically I don't like to trade these, but I was still watching it, and this opened, the candle opened, it pushed back up toward VWAP, but it got aggressively sold off. I mean, it hit here and it aggressively got sold off, and I grabbed some here, really right at the low of this candle. I was just a little bit late grabbing the button, but still we got in, and it started to work. Then we got the bounce, and it kind of traded sideways for a little bit, and finally we came down and hit our target. And it's all about being patient. Here I did not put my stop in. I kind of held on to it. I knew where I wanted to stop out, and I knew the volatility was going to be in this stop. A lot of people were trading it. We were low on volume though, but you had a lot of people on both sides of the fence trading it. So it kind of made it volatile. But hit the first target, and 35 minutes worth of work got ripped up in one 5-minute candle. I mean, it was disheartening. But we did get the base hit, locked in some profit there. So I waited until we broke this channel. You can see we kind of put in this channel here, and I waited until we broke through, and then we claimed it. And once we claimed it, I got in. But being patient and waiting for levels to claim doesn't always work. It's not a perfect thing. And you can see we ended up finding support here. And then once we started verifying to me that we had a trend change coming, I went ahead and jumped out. And we only lost 25 cents per share here. So we had a good move over here. We picked up some money on. Here we just lost 25 cents a share, no big deal. And you can see the stock just kind of never broke out of this channel that it put in. Just kind of traded in it all day, the rest of the day. The other trade I took was SPLK. I had to trade this in another account because we were I was dealing with WYNN in the other account. So this count says the day trade. I wanted to trade this in that account, but I just couldn't. So I got in on the break of the 52-week high. We broke above it. Here we came back. We pulled back because you saw as soon as it broke, we had some big time profit taken here. Then we pushed back through it. And with this candle holding, I felt really good about getting in because at this point, this was a solid green candle. And we got up to around 178 and it started to sell back off. So we got a little pullback here. Again, not putting in my hard stop until we make a higher high here. But it pulled back and then it ripped up, started hitting my profit targets. My final target was right up here at 185. And in hindsight, I probably should have just used 184. I could have taken, when we did all of this, when we came back through 184, I could have just taken half of the position I had left off. But I didn't. And I just kind of made that mistake. And then we got a profit stop here at 182. But it finally got up there. It finally breached 185. So had I left this on to break even, I would have hit my target. But the name of the game is a lock-in profit, and that's what I did here. So not upset about that. So really good into testy week is kind of what it turned out to be. But I'm green, and green is good. And I'm not focusing on numbers this week. If you noticed, I'm not focusing on numbers. I'm only going to look at the end of the week. I want to see my equity curve. And that's what I want to focus on. When I started focusing on numbers, it got into my stock selection, and I was trying to find the home run stocks, just like I was talking about earlier. When you start making big trades, you want to do it all the time. You want to do it every day. You want to put yourself in position. And really, the thing is, you just keep trading the way you always trade. Don't change anything up. Don't try to just look for big things. Just whatever your normal deal is, stick to it. Because the minute you start changing up, that's when things are going to get out of whack for you, and you start to go backwards. All right, so that's going to wrap it up for me. I'll share the equity curve and all of that stuff on Tuesday when I do the recap, because like I said, after this, I'm done. I'm done for the weekend. With the exception of our Sunday morning session. That's it. So I'll be working on it next week. And we'll have that out on Tuesday. But you guys have a great weekend. And I would recommend you just taking it off. Just take it off and come back fresh. That's going to do you more good than binge watching training videos and all of this stuff. You'd be surprised how much rest will do for you. All right, so you guys take it easy. Have a great rest of the weekend, and I will catch you next week.